What's up, guys? My name is James.
This is Jonathan.
And we're both the owners here at Elite Motor Group. We'll be covering the topics of financing, refinancing, and auto loan. This is kind of where we separate ourselves from a lot of people, and we realize that we're spending a lot of time individually educating a lot of our customers on how to go about things and which way to go about it. Because a lot of people, they all come in here with the guard thinking we're salespeople, but we want you guys to make the best financial choice. And we always say it's not that the salespeople who work at dealerships are dumb. They just don't have this extended education or knowledge to be able to share with you guys. So we'll jump right into it. One of the things that it says here is, what does it mean to refinance? So just to break it down very basic is, let's just say you started your loan with Chase Bank at 18% because you're a first-time buyer. You want to refinance it, which means that you go to Wells Fargo. Wells Fargo then says, okay, we're willing to buy the loan from Chase for 6%. So you pretty much just cut it, from 18 to 6. You'll save that money rather than paying all that interest towards Chase. You're going to go ahead and start saving from there. And we'll get more into detail from there. When you can refinance, so we'll go into detail as far as that as well, but it just depends. So if you're a first-time buyer, you typically have to wait a year because you want to build some credit history. If you already had some history and you're going to eliminate some bad credit things that are on your credit, then you can just do it after 3 to 6 months, depending how fast you take care of those collections or whatever it may be. Why is it important to know? Well, you don't want to give your money away. I always make a joke to certain friends. It's, I know some of us have to take an auto loan at a certain interest rate. I just say, look, if you're not going to take care of it, let me just buy your loan out and you pay me that interest. And then people are like, no, why would I don't want to give you the money. I'm like, well, you're giving it to somebody. And then what you can't refinance. The other topic there is you can't do it. Credit unions and banks have where you can't go further back than 2011. So if the car's in 2009 and you're trying to refinance, it's not going to happen. For 2010, it's not going to happen. It has to be 2011 and above. And I can't have typically more than 125,000 miles. So we'll go more into detail on a lot of these topics and conclude of them. And we'll let Jonathan take over here.
All right, guys. So why is it better to pay off some debt versus giving a little bit more down payment to the dealers like ourselves? Essentially, it gives yourself an opportunity to boost your credit, put yourself in a better financial position through the months to come. Now, if you have a better credit score, you're available to refinance, get that lower interest rate, and we'll go a little bit more in detail as far as the savings go. And then again, you give less money to the bank. So it's either you pay now towards some collections, towards something that's going to go ahead and put you in a better financial position, or you give it to the bank. So it really depends on to who you want to give the money to. Personally, something that we tell you guys here is that we try to guide you in the right steps and obviously making the right decisions. So
to detail on this one.
So this is a little bit of a chart that we've drawn up. Give you a little bit of a differences as far as what it looks like to get a 21% loan versus a 4.5%. It's going to be on a vehicle as $18,850. Something like this is completely stupid. It's really crazy, really high how much interest you're going to pay. So just to break it down a little further, you're looking for a loan for $18,850, sales taxes $1,550, upfront payment, which is going to be your down payment, $3,500. This is normally when we have a customer come in, they're looking for a car, they're looking to spend about 20 grand. This is not ideal for them, but this is a lot of people's similar mindset. Now, they're looking to put about $3,500 down. Total payments, they're looking at $30,597. What that means, throughout the life of the loan, they're paying $11,000. So what we want to, get you to do is obviously have the lower interest rate. And going back towards the topic of paying off collections or debts that you already have to get the better credit score, this is what we're talking about. Scenario one, let's just say you have a Best Buy card, it's in collections or it's late payments, you owe about $900. It's preferable for us to tell you, hey, pay off this $900 debit card, credit card, Verizon credit line. Sometimes even with the phones being financed or whatnot, some people just say, hey, you know what, I'm not gonna pay anymore. appraised and puts into collections, you owe $400. If you pay all these off, for example, you're looking at $2,800 one time. 45 days to 60 days, your credit's going to skyrocket. These collections are going to be paid off, and then you'd be eligible to get, potentially a 4.5%, and let's just say just a better interest rate overall. And usually it'll take, like I said, about 2 months for it to actually reflect on your credit. So now you're looking at the same vehicle, $18,850. Sales tax is still the same, $1,550. Upfront payment, you could either reduce this, but for numbers' sake, we're going to leave it the same. Total payments with the loan, you're looking at $21,085 with 25 cents. So now the difference is huge, right? So amount of interest that you're paying is only $2,200. Now, would you prefer to go ahead and put an additional $9,000 to the bank just because you don't want to pay off collections? I think it's a no-brainer. The problem is a lot of people don't see it this way. They say, hey, no worries. I'd rather put $3,500 towards my car. They're thinking they're getting a better payment. Essentially, you're really hurting yourself in the long run, just simply because you don't want to pay off things like this, your collections. And that 1 or 2 trade line that's on your report that's hurting you may not even be as much money that you want to put down. So this is some of the things that we try to emphasize when clients come in here with bad credit, collections in the past, and we've seen collections as low as like $100, $200, and people $65, and people just don't want to go ahead and pay it, or they don't know that that's really going to boost your credit 30, 40 points. So
the payment's $162 difference. But I mean, we get it. We kind of have customers who come in here and they're like, we can afford a $550 payment. So in my head, when someone comes in and they say, hey, I have 590 credit score and I have this much down, we automatically think like, okay, how much is affecting your credit score? And is it worth it just for you to dump that money? I mean, I can tell you for a fact, and maybe some people will comment on this video that I told them, hey, wait 3 months to stall on this deal, and they've done it, and we rather kind of pause the sale and kind of get you a better rate than to kind of just sell you a car and you're not happy with it. Because I always tell people, me selling you a car, you're not going to remember me. But if Jonathan and I educate you on stuff like this, you guys are going to obviously know, like, okay, these guys know what they're talking about, what they're doing. So, I mean, like he said, $9,500 is a difference in interest. Yes, you can afford a $519 payment, but why when you can pay $357? And then if you can go to the next one, just to emphasize like on this, I know a lot of you guys hire people to fix your credit, and it's not a bad idea to get some of these things to, these people to take care of them, but you're still going to pay $700, $1,000 for these people to help you out. And one thing to emphasize on this is negotiable. So these people, when you go into collections, a lot of people don't know this. Let's just say you're in collections for Best Buy. You owe them $900. They've been trying to collect that $900 for 2 years. Best Buy essentially sells this $900 to a collection agency, which is a whole different company, for like $100. It says, all right, guys, good luck. Go collect whatever you guys can. So if the collection agency bought this $900, what you guys owe Best Buy, they're willing to negotiate. So if you guys start at $2,800, you guys can probably bring it down to like, I don't know, let's just say worst case scenario, $1,900. And still, I mean, if you go back to the other slide, your credit will boost above 650. That's the only reason we do at 4.5, because if you, for some crazy reason, it jumps above 700, then this would be a 2.99. But let's just say you use your $3,500 to pay off those collections, then you can totally come in with $500 and it would be totally worth it. But that's pretty much it. I mean, if you want to go through the next slides and we'll emphasize some other things.
Yeah, and obviously this is going to be related to people. I mean, there's some people that already have loans. So our best advice would be to really start looking into those collections that you have and start putting some money to handle those. The other thing is, this may not be the scenario for a first-time buyer. James, you want to give a little more insight on that?
Yeah. So a lot of, some people, this may be your only option because you're 20, 21, you guys don't have family. So, in these cases, you have to kind of take what's given to you. So this is kind of where we strategically plan with you. A lot of salesmen at dealerships will tell you, oh, just refinance. I mean, truth of the matter of fact is that a lot of you guys don't even know where to start where refinance. So that's kind of where we tell people, hey, within 3 months, call us. I will connect you directly with the people that we talk to, because I've had a friend who applied for refinancing an auto loan and he completed his credit application wrong and he got denied. And if he would have probably had that conversation with myself, he probably wouldn't have kept trying. And that's kind of just small things that go into factor on how to fill it out, how to go about it. So it's not, don't feel embarrassed to ask us, because that's what we're here for. We're here to be a source. But to emphasize, so if you started on your first time buyer, you're buying, I mean, you probably won't be able to afford a $18,000 car as a first time buyer. They may want you to do a $10,000, $12,000 car just because you don't have anything on your credit that shows you've been able to handle a loan like this. But you take the 21, you would go a year, like we started in the video. You know, I said you can't do it in 6 months because you don't have that history. So you'd wait a year, and then you would only pay this 21% for a year. And then after that 1 year, you call us, we'll connect you with the credit unions that we work with directly. And then you would refinance it and then go back to 4.5. If it was someone who graduated college, I always, you know, if you want to get something $20,000, you know, for example, my girlfriend's sister actually is asking me for a car, and I can sell her a car and I can buy her a car. But the only thing that I can't offer her is the first time buyer program, which like Mercedes, BMW, Mercedes and BMW or Toyota, they offer first time programs. So they know they'll do with college grads, they'll do where they'll allow you to finance a car without any credit history, because they know that you've obviously been taking care of business in school for 4 years. So that's a key factor. And that's pretty much it with the first time buyers. So if there's anything else that we kind of didn't emphasize on this topic, like just ask us in the comments or whatever other sections that we go on this video. And then this is the way that interest is collected. So I'll let you kind of take over on here.
Yeah, so essentially what we want you to see is what really happens when you take on this loan. Part of it's going to go to principal, part of it's only going to go to interest. So as you think that, you know, I make my payment every month, every 30th or every 1st, for example, you think that all your money is going down to the principal. It's not. Some of it, again, is going to interest, to principal, which amounts to the total amount of monthly payment. So in this case, the quicker that you fix your credit, work on your credit, establish a strong track history of your credit score, the sooner you start saving on interest. Then we start switching it over where you see more payment is being applied to the principal versus the interest. And again, essentially, it's going to save you money in the long run. And so, you want to add to that?
Yeah, so the reason I always say, like, kind of make it very, like, stamped in your brain why it's important to refinance so fast and as soon as you can is because you realize most of it's going towards the interest. The bank always collects their money up first, so if you start realizing here, it starts balancing out. Obviously, we couldn't add it, but typically, most of it, you start paying towards the principal towards the end. So if you don't do within, like, let's just say the first 2 years, a year and a half, what you owe is not going to go down as much. And let's just say you buy $18,000 car, you drive, you put 30,000 miles on it, and you go to the bank and refinance it. Well, the car is only worth $13,000, $14,000 now, and you owe $17,000, $18,000. The bank's going to say, okay, well, you need to come up with a $4,000 difference because you took so long to refinance the car. That's why I emphasize, like, make sure you refinance as fast as possible, as soon as you can, and we'll obviously give you those deadlines. Like I said, first-time buyers, it's typically going to be a year. So as soon as that year hits, you want to make sure that you take care of that. It actually be a year and 1 month because that last payment's going to take 30 days to post. But this is a exact reason, that we want to put it in visual for you because we want it to be kind of like, all right, you don't want to give your money away. But I think what's the next slide on this? I think we're good. So that's kind of what we wanted to emphasize on. Let us know if you have any questions. We'll be covering a lot more topics, and we're kind of excited to go about this. Jonathan?
Yeah, essentially any type of topics that you guys are interested in, dealer insight, you yourself as a consumer, and you're like, why in the world did I come into this dealership and they try to finagle me? I'm here for 6 hours. your things that like really come to your head, feel free to comment. Feel free to reach out to us, see what we can do to go ahead and shed some light on that. We're here for you guys. To be honest, this whole auto industry is a little shady. The whole trick of, let me see your ID, let me go ahead and hold on to it, and you got to see my manager. We don't play that game here. And essentially, we're here for you, trying to give a little bit more light as far as this industry goes and be a little bit more personable. So if you guys need information, just feel free to comment, reach out to us, and we'll go ahead and make a video or reach out to you personally to go ahead and explain things.
We actually tell people not to come in. So we actually do it in reverse. Most people want to come into the dealership, but Jonathan and I, we always say we protect our time before yours, but that naturally protects yours. Most cases, most salesmen want to wheel you in. They want to hang out with you for 8 hours. We love our friends. We love what we do. We love our clients, but we can't hang out for 8 hours. It's just not going to happen. So a lot of our clients, we send so many 360 videos inside and out. We obviously ship a lot. And most of our clients, they apply for financing based on the videos we send them. We'll show them curb rash on the wheel if it has it. But it just goes to show, we want you guys to come in, get out. If you apply for financing, all the paperwork will be drawn. We'll give you everything, every little detail. There's no accessories hidden. We'll give you all the information ahead of time. But that's pretty much it. I think we're good.
Good.
All right. See you later, guys. Take care.
Stay tuned for 2.